Welcome to Mark Arnold's Finance. Today I have a very exciting video. I'm going to talk about why I think Amazon is the best opportunity out there in the market right now. And before I do that though, I put a lot of work into this video. I'd appreciate it. Subscribe to my channel. I provide very quality content. I'm very consistent. I'm not going to just disappear someday. I want to become wealthy. I want to grow my knowledge. I'm very transparent. So why don't you join me and let's grow together. So let's get started with this video. Amazon. Why do I think it's the best opportunity in the market? Well, we're going to go over a ton of things today, but first off, what is Amazon? We all have heard of it and we all probably think we know it, but I think I'm going to blow your mind today at just how big Amazon is, how big their moat is, their reach, and their opportunities. So Amazon is a retail and shopping business. It's an entertainment business. It has a lot of emerging businesses. It's always starting up new businesses. It has Amazon Web Services, which is the cloud part of it, which provides compute, storage, database, analytics, machine learning, and other services. So this is a beast of a company, I feel. And the big news is I finally bought a share of Amazon. My first share, and I bought it at $2,281. And I'm already up 0.63%. I just bought it Friday, so I'm not going to celebrate yet because there's still some volatility in the market. But I want to point out I was patient, and you're going to see why, because let's look at these charts. If we look at the 5-year chart, Amazon is up 138%, which I think is an annualized growth of about 27-28%. So pretty sturdy. But you'll see in the last year, this stock is down over 30%. So definitely has had a harsh year. And if we continue, we look at the last month performance, it is down 32%, almost 32%. And this is where the patience kicks in. I could have bought a month ago. I was thinking about it, but a few things kept me from doing that, and I'm glad I waited because I saved myself $1,100 per share. That's how much it dropped down compared to where I bought it from. So I saved myself $1,100 per share. That to me is just so crazy. If we look at their all-time high, going to their low from just Friday, they are down 38.5%. So almost 40%. The stock has gone down from its all-time highs. For a large growing company like this to me is just bizarre and creating an amazing opportunity for investors. I said this company's huge and massive. Things blew my mind. So I'm going to show you now. I'm going to show you how large their moat is by quickly going through some of their most popular services and products. So let's run through them right now. First off, we have Amazon Retail, that side of business where you can go and buy stuff, and that usually comes with Amazon Prime. It's a service people can sign up for. It provides a lot of benefits, and I bet you almost everyone watching this video has utilized Amazon to buy something. There's also Prime Video that comes with that subscription, or you can buy it separate, and that provides a lot of content. It's like a Netflix, but it includes the upcoming highly anticipated Lord of the Rings. They also just bought MGM Holdings, which has over 4,000 films and 17,000 TV shows. They own Alexa, which is a virtual assistant and comes with the Echo device. They own Ring, which has the doorbells, the cameras, the alarm, the smart lighting, the accessories, the Ring for pets. They also have Eero, which is an internet and Wi-Fi system and enhancer. I think I say that right, Eero. They have Kindle, which is ebooks. They have Twitch, which is a live streaming service. And just to put something in perspective, their monthly average streamers is 3 million people. YouTube is 700,000. So just put that in perspective, they're a lot higher than YouTube when it comes to live streaming. They own Whole Foods, which we all know is a grocery store, but on top of that, they also open Amazon Fresh Grocery, which is an online and physical store. So they have their own name on this grocery store. They own 18% ownership in Rivian, which is an electric vehicle company. They own Zappos, which is an online shoe and clothing retailer. Doing some research on this, I didn't realize how popular this was, but it's extremely popular. They have Audible, which is audiobook and podcast service. They are now making Amazon smart TVs, so I definitely am going to look into that because I'm due for a TV myself. They have Amazon Cares, which is a virtual healthcare and in-person urgent care visit business, so that's huge. We'll touch base on that. They have what's called Project Cooper, I believe, but this is an aim to offer satellite broadband internet service to tens of millions of people who are currently underserved. And then they have Amazon Web Services, which we kind of talked about already, but that includes and provides compute, storage, database, analytics, machine learning, and other things. So that's just a few of the things that Amazon does as far as its businesses and its products. So now that I can take a little bit of a breath and slow down just for a minute, Let's now dive into their recent earnings and highlights and kind of talk about it, because this is what kind of sent their stock going down. So with their recent earnings, they had an operating cash flow decrease of 41% to 39.3 billion. Now, even with that, 39.3 billion is still massive and amazing. So this is just, a lot of people are saying their business is slowing down, and it's due to a lot of things, the Russia-Ukraine situation, inflation, stuff like that. And then their free cash flow decreased to an outflow, so money going out to 18.6 billion. But just a year ago, they had an inflow of 26.4 billion. So that's a massive swing. And that just goes to show this company can spend or keep money in the billions of dollars between year over year. Their net sales increased 7% to 116.4 billion. So that's a lot of money. 116.4 billion in net sales, that's massive. Their net loss, this is where really their stock went down. They had a net loss of 3.8 billion, and 7.6 billion was included in a non-operating expense from our common stock investment in Rivian Automotive. So what they're saying is they made some loss with Rivian, which contributed to that 3.8 billion net loss. If it wasn't for the Rivian, they would be at a net gain. Overall, this company has huge free cash flow. This company has huge net sales. And so though the company slowed down in some areas, I really think the future is super bright, and we're gonna go over some of that here in a minute. So next I wanna talk about its different kind of parts of its business quickly. We're gonna jump into shopping. So the biggest thing I want to point out is Amazon announced Buy with Prime. Now this is a new benefit for Prime members in the United States that extends the convenience of shopping with Prime to online stores beyond Amazon.com. So certain companies can agree to join this. So let's say Target, you can choose to check out with Amazon Prime instead of with Target. That's just an example. I'm not saying that's one of the companies that joined them, but this is going to create a huge reach for Amazon to a lot more customers, right? When they can just say, oh, no, I'd rather buy with Prime because I already have, that service, and it just is nice to have it all on one so I can see everything I bought. So that is huge, I believe, and something to highly consider. As mentioned, they have Amazon Fresh Grocery, and they opened 8 new stores, and they now have 46 stores around the world. So that to me is it's another area of growth. They opened a larger Amazon Go store format. So really what this is it's the first walkout technology, I think, out there that I know of, and Amazon's doing that. So basically you go into the store, you get what you need, and you just walk out. There's no checkout service. There's no checkout process. You just walk in, walk out, and due to the technology, it knows exactly what to charge you on whatever card you probably sign up for. And this is huge because I think checking out is just a process nobody likes. And this is just creating more convenience. It's saving the customer time. It's a great thing and something I think to keep a close watch on, because I think it'll be everywhere. In fact, they also are doing this with Whole Foods in Washington, D.C. and California with this technology. They're also doing some stuff with procurement services for businesses and making things easier. That's just something that all businesses want. So that to me is, they're not only helping the consumer, but the businesses as well. Now let's look at entertainment. Of course, they closed the acquisition of MGM, which provides that 4,000 films and 17,000 TV episodes that I mentioned, but it has popular franchises such as James Bond, Rocky, and Legally Blonde. They released a teaser trailer for Lord of the Rings, which had a record for most watched entertainment trailer to debut during the Super Bowl telecast with 257 million viewers globally in the first 24 hours. I think this show is going to be a massive hit for Amazon Prime Video, and that's just something to really think about as an investor. They also are joining the Thursday Night Football coverage with Prime Video, and they're having some big names join to do the voices. And anything with football is huge, right? So the fact that they're getting a part of that is great. And then Prime Video became the first streaming service to exclusively carry a major award show live with the 57th Annual Academy of Country Music Awards. And they created a 360-degree fan experience for customers across Prime Video, Amazon Live, Amazon Music, Amazon Fashion, IMDb TV, and Twitch. So again, they're just innovating, and they have a lot of technology to utilize. They also their IMDb TV became Freevee. Now say that 26 times in a row. Blech. But that's basically a free premium streaming content. So I think that's just going to allow them to get a different customer base to get in and start, getting used to Amazon and, some free marketing probably. And then Amazon launched a service for creators to DJ their own shows with tens of millions of licensed songs. They have big names like Nicki Minaj, Queen Radio that's coming to it. Again, just expanding its moat, its reach. And then they're into gaming as well. You'll see down there, their free-to-play game Lost Ark exceeded 20 million global users, and it's published by Amazon Games. So they're in gaming, which is also a huge industry. If we keep going, now let's talk about Amazon Web Services. Now this one, there's a lot of things to this that I don't quite understand because I'm not the most technical person, but we'll just highlight that in the telecommunications sector, they gained such businesses and contracts with these businesses such as Verizon and Telefonica. In aerospace, they got Boeing. In sports, they have the National Hockey League or NHL. In technology, they have 3 there that I don't know of, but they have a ton more as well outside of this. And then in health, they got one called Thread. So this is just in the quarter, but if you go back throughout their history, they have a ton of companies that they do business with. I mean, massive. So Amazon Web Services is huge, and they're expanding their zones, they call them, just to reach millions of more people around the world. They're providing services that are more cost-saving, provide more cost savings for businesses and provide faster speeds. They also have content creating, parts of the Amazon Web Services that makes things easier. So minimum coding in days instead of weeks. So just wanting to point out a few things from a non-technical brain. And then to point out a few things with their web services, they have a massive share of the market, 33%. Next in line is a far distant second with Microsoft with Azure, and then at 21%, and then Google Cloud is 10%. So Amazon has a huge market share lead, and to me that is just invaluable. And then also the cloud computing market as a whole is expected to grow from $445.3 billion in 2021 to $947.3 billion in 2026. That's more than double the growth in just 5 years. That's massive. So I just want to show the opportunity that there is with Amazon Cloud, with their Amazon Web Services, that I don't think a lot of people are really considering or including in their analysis of Amazon. So if we keep moving on, they also have devices and services part of their businesses. So they launch new Alexa experiences for customers. And one that I think is important, it says Amazon introduced a new Alexa shopping experience that can notify customers about upcoming deals for items on their wish list in their shopping cart. This to me is just dangerous, and a lot of people are going to be spending a lot of money with this. They launched Ring in Japan, so Ring is super popular, so I think it's going to be a massive success in Japan. They are, as I mentioned, they're making their own Amazon TV, and then they also just are increasing their Eero Wi-Fi home systems to provide fast connectivity and high performance for customers. So just great things going on with this company. And in their emerging businesses, so their kind of new stuff that they're getting into, Amazon Cares virtual health services. To me, this is one that hasn't really hit the headlines yet, but this is huge. They're getting into healthcare. They provide 24/7 virtual healthcare, and they also have in-person care at certain urgent cares in Atlanta, Chicago, Los Angeles, Philadelphia, and San Francisco, and will add 15 other cities this year. That's huge. So that's just something to keep in mind. And then with that Project Cooper, I don't know if I'm saying that right, but this is their initiative to increase global broadband access using a constellation of satellites in low Earth orbit. So Amazon is even in outer space. So that's just another amazing thing that I found upon my research with Amazon. Some other bullish points that I want to make is Amazon is they also announced back in March that they're doing a 20-for-1 stock split and doing $10 billion in buyback of their shares. So what this does, I think, is it makes their stock more tangible for a lot more people, because like myself, I do like to buy whole shares. I don't like to buy fractional, but not every platform provides that opportunity for fractional shares. So I think more people will buy in and it will help their stock. And also with the buybacks, that's always a good thing, because when they buy back, that means we're increasing our ownership in Amazon. So when any company does buyback, it's a great thing for investors. So I think this is just more good news from Amazon and adds more to my bullish thesis. So some other bullish points that I want to quickly make is, Amazon has these huge distribution centers. They just built one on the west side of Albuquerque here in my hometown, and it's huge. It's on the west side. You can see it from almost any point in the city. But of course, third-party sellers are required to store their stuff at these centers because Amazon's all about speed, right? About getting the products fast. So Amazon charges rent to those third-party sellers for holding their products in their warehouses. Just think about that. They're collecting rent from all these third parties. That's huge. Also, another bullish point is subscriptions. Subscriptions, when they're successful, are a gold mine for any company. Microsoft is very successful at it, and so is Amazon. You look at Amazon Prime, that's the individual consumer that buys these. It's a sticky product. I know a lot of people, with the recent increase in the rates, didn't cancel, they kept it. And then with Amazon Web Services, that's revenue, recurring revenue coming from businesses, which is a lot more stickier because when you build out these cloud systems with companies, company just can't, say, oh, I don't want to do it no more. It's a huge deal. So that's a huge part, and why I'm so bullish on the Amazon Web Services part of it is too, and why I don't think people are thinking about that. So they have sticky products. If you try any of their products, most of them you're going to keep with those products because they work so well and they're high quality. And then the large moat, right? We just saw all those many products and other businesses that Amazon owns or makes or has, and that's just a fraction of them. So they have a large moat. And then the last bullish point I want to quickly bring up is they're all about convenience. Amazon, I think part of their probably mission for everything they do is how can we make this super convenient for the customer? And I know customers will choose convenience every single time in the end. So that's a super awesome thing that Amazon does. I know I appreciate a lot of their conveniences when I order products or any other type of their business. So that's big. Now, let's look at some financials. Let's do some valuation and metric analysis. So let's look at their price target first off. I think that's always a fun thing to look at. So there's 38 analysts that are looking at this stock. 36 rate it as a buy, one as a hold, and one as a sell. So at the low end, they're saying it's $2,250. Now I bought it at $2,281, so I'm right there at the bottom. But the median is $3,700, which is an upside of 61.2% from where it is today. That's huge. In a year, to grow 61% is massive. Now at the high end, $4,250 per share, that's a growth of 85.2%. So this is all great signs for me as an investor. Now let's look at their earnings per share history. What I will say is Amazon's earnings per share aren't the sturdiest. They're not like a Microsoft where they're just a steady growth. You'll see ups and downs, especially recently, and they just went into the negative, but last quarter they were $27 earnings per share. Now they're negative like 7 point whatever. So this to me just, what I believe is Amazon is just kind of really confident that, hey, regardless of these swings, we are going forth, and in the end, I think people are going to see that this company will become a Microsoft someday, kind of that more sturdy company that is more for the investors, where now it's just focusing on growth, and so it's not really caring about, having this sturdy growth kind of history. It's just getting in there, doing what it needs to do, and that's just my opinion. If we look at the PE ratio, this is one thing that everyone looks at. Right now it's at a 55.41, which you might think is expensive at face value, but in the last year it's actually kind of in the mid-range, you'll see. But what blew my mind is when I took it out to 5 years, it's actually at the bottom. So this PE ratio has gotten more and more positive, more and more at the low end as the years go on. In fact, in 2018, it was near a 300 PE ratio. What this should show you is as their earnings grow, the PE ratio is going to be reduced. And with the huge growth that I expect in the future, buying in right now, you're going to be in the future having a very low PE ratio for this massive company. So that is something just to keep in mind. So this PE ratio is on the downtrend, which is what we want to see. If we look at their market cap, this is another thing why I jumped in on Friday, because it's at a 2-year, it's kind of wiped out 2 years of its market cap. So May of 2020, it was at this 1.167 that trillion market cap that it is now. So that's 2 years of market cap that was just lost. And at its high, it was at a 1.88 trillion, and right now it's at the 1.167 trillion. And so for me, this company is still growing massively despite its recent earnings. There's a lot in that it's growing. I'll show you the revenue here in a minute. But this is a growing company, and yet their market cap, their stock price has dropped, 40% from its highs. And this is just, to me, a great opportunity for us investors to get in, and it's making it look super attractive. So why am I buying? Why do I think this is the best opportunity right now in the market? Well, as we just looked at some of the financial data and analytics, I believe this company is very undervalued right now. And long term, I think it's extremely undervalued. I think the future potential for this company is just massive. And looking at all these things, what all this company is doing, eventually someday the revenue that's going to pour in consistently and grow like a Microsoft, when they kind of focus it more on the investors, if they need to do that, because that's also important, right? This company is going to prove in probably 2 to 5 years that, hey, you invest today, you're going to be a happy investor in 2 to 5 years. So I think they're undervalued. They have a large moat. We went over not all, but just a chunk of all their businesses and products that they're in that people might not think of. And to me, that just is safety. The large moat is the safety. Their business model, I think, is all about convenience for the customers, which I think customers will always choose convenience in the end. They might try something else out, but then they'll come right back to Amazon because it's just convenience matters, right? So to me, that's just strength for this company, the convenience. Amazon Web Services. This is a huge part of their business that I don't think people give enough credit for. It's providing huge growth, and it's providing a lot of revenue for this company. In fact, it's 16% of Amazon revenue. So Amazon Web Services is 16% of the total revenue of all of Amazon, which is massive, and it brought in $18.44 billion last quarter. So it did grow 37%, where I think Microsoft's Azure grew 50%. But keep in mind, Amazon is the market leader at 33%, and to still be growing at 37% is mind-blowing. Just think of that. If you're already that dominant in the market share and you're still growing by 37%, that's just very impressive. So I don't think people factor in enough for Amazon Web Services, and this is just a huge opportunity for the future. As mentioned, they have very sticky products. I think you start using their products, you're going to stick with their products. And their sticky revenue, or their sticky subscription, provides dependable revenue. So Microsoft is a very successful company when it comes to subscriptions, and Amazon is proving to be that as well. With Amazon Prime, their Amazon Web Services, it's just a massive gold mine for this company that I think people have to focus on. So, with these recent downtrends in its stock price and its market share, let's look at their revenue. I thought this was important to bring up because their revenue is still growing. Yeah, it went down this last quarter, but if you draw a line, the trend is up. And there's also another trend I saw with this. It kind of goes up, down, up, down, up, down, but it's on a steady incline. And this quarter mainly was due to Rivian, why it went down. I don't think that'll be a factor next time, so I really can see in the next at least quarter or two that being turned around in a massive way. So this company's still growing. They're still, creating new businesses. Their moat's expanding. All these positive things are happening, but yet they've lost 2 years of market value. Their stock's down over 40% from its highs. In fact, from just a month, its stock price went down $1,100. So I saw an opportunity. This was the time to get in, and it's now 6% of my portfolio, my whole portfolio, and I am now a happy Amazon owner of a share, one share of Amazon stock, and I'll just be looking for any more opportunities. If it stays below 2,500, I'll keep buying, but if it happens to dip below 2,000, I will definitely buy, because I think that's unlikely, but it's still likely because of the volatility in the market right now. But right now, I think it's just a stellar time to invest in a solid, growing company like Amazon that has a huge moat that many people don't even know how much it's got its hands into. I just see this as one that it's hard to pass up, and I do believe this is the best opportunity in the market. So let me know if you agree with me or if you think it's not a great opportunity and why. I don't think that's the case, but I'm open to hearing any bear cases out there because I want to be a well-rounded investor, right? You never want to become hard-headed or have a small view because that's when you're going to make mistakes. I've looked at the positive, I've looked at the negative, and overall, from what I presented today is what I researched, and that created me to just buy into the stock, and I want to buy at least one more share within the next couple months, and we'll see what happens after their stock split too, because I think that's another positive for this stock from that point till the end of the year. So I hope this was a good video for you guys, providing my analysis, my research, and putting it out there, and why I think this is the best opportunity right now in the market. And with that said, guys, I look forward to the next video. Be sure to subscribe, and have a great day, everyone. And thank you for watching, and we'll see you next time on Mark Arnold's Finance.